Welcome to Market Movers. I'm Jim Urio, and we are currently moving into the heart of earnings season. 4 tech giants, Apple, Facebook, Amazon, Alphabet, all will be reporting in the next 2 weeks. Put some perspective on this. 35% of the entire S&P's advance in 2017 has been the responsibility of those 4 names. We're going to be looking at using weekly options to hedge risk or create additional exposure to these volatility-inducing events. Joining me is Chief Investment Officer of Kingsview Asset Management, Scott Martin.
Hi, Jim.
Scott, we've been through a lot in the last couple months.
You and I have, too.
We have, yes, but global events.
Together, yes.
Macroeconomic policy events. Now we're at earnings. Is this what we need to get our head straight and get our focus on the real thing?
I believe it is, because the market, to me, Jim, is looking for some direction again, and it's being pushed and pulled by things going on in D.C., as you mentioned, and these geopolitical events. So maybe a good earnings season, as you mentioned, from maybe the big 4 that you talked about in the intro, that could really help push markets one way or another.
French election Sunday night. We can't not talk about that.
It's the first leadoff into what could be a really rough summer for Europe. I mean, maybe it's not the time to go to Europe for once for the trip, because I'll tell you what, this is a leadoff into what could be kind of the destruction of the European Union. Very interesting to watch.
Our markets suffer because of that initially, if Marine Le Pen wins.
Take a clue from Brexit and all the volatility that induced last summer.
Makes sense to me. Now, before we dive into our trade discussions, I'd like to point out that, as with all market movers, it's important to view these trades as examples that allow you to see different ways to use futures and options products to manage risk or create additional trade opportunities, not as recommendations. Prices and movements will vary in the markets. Scott.
So I talked about the markets needing some direction here, needing a clue given everything that's going on. And I took a look at the charts today and I thought, gosh, where is the value given what's coming up here? So I was actually looking at the NASDAQ, thinking about those names you mentioned with the Amazons, the Googles, the Microsofts, and so forth. Looking at the week 1 May options here, Jim, and actually looking at a 54.50, 54.70 call spread for 10 ticks. Looking to sell this, though, so taking in the premium. The underlying, by the way, was about 54.22. It's going to risk the 200 to make a potential 200 that you're going to take in. So the reality is, if the market stays where it is, we don't get a lot of movement out of these earnings, I think this thing works out pretty well.
Well, it seems to me there's 3 possibilities. The market stays where it is, the market goes up, or the market goes down. 2 of those possibilities, you make money, and you get 50-50 on this. I think that's a pretty decent trade.
And you're protected by some of the recent highs in the NASDAQ being towards the top end of that call
and I'm not
spread.
even the same way as you. I'm looking at it a different way. I'm looking at it from a bullish standpoint, which I have many times since we've been talking over the last few months. I'm looking at buying the week 1 May, the same expiration, the 23.70, 23.90 call spread for 5 ticks. This goes off May 5th expiry again, and June is the underlying. Currently at about 23.40 is where the market is right now. This trade risks $250 to make $750. Again, this is putting out a little bit of premium to make a 3-to-1 reward.
And here's the interesting thing about where the market is, Jim. It's been quiet the last couple weeks. There's been a lot going on, I believe, underneath the surface. But a big move out of this earnings season could be the tonic that the market needs to move up or down.
A lot underneath the surface. Truer words were never said. Thanks for joining us in this special edition of Market Movers. I'm Jim Urio, where we're helping to make you a better trader.